Good day, traders. How you doing today? Hope all is well. Okay, let's check out these setups. Okay, this is the NASDAQ 5-minute. Come on. There we go. See it at the top of the chart? It's the NAS 5-minute. Okay, our first setup of the New York session, which starts at 8 o'clock Eastern Standard Time. Anyway, here we go. So if we draw that to the top over there, we don't have to actually. No, let's draw it to here. It's a pullback. It's genuine. It will do the job. Yeah, right from here. Right there. Okay, we'll make it bigger so you can see it. Okay. And from this peak here to over here. Yeah, it's not that far. It's right here. Okay. Right there, close enough. Right in there, close enough. And that's divergence. So hidden. It's hidden. Yes, it's hidden divergence, okay? So with hidden divergence, whatever it's the line that I just drew on the OSMA, whatever it's, if it's, because it's hidden divergence, it doesn't matter. It's the opposite of where it's pointing. See, it's pointing up. It's not going to go up from here. It's going to go down because it's hidden divergence. But if it was a higher high or double top, then for sure, wherever the line you draw in on the OSMA will be pointing in the direction that it will most likely go. Okay? All right. So you would have got in short right here. Let me put that arrow on there. Right there. 5 minutes before the New York session opens, you would have got short. Stop was very minimal, 20 points, 20 ticks, 20 ticks, 20 points. Went down 54 points. See that? That's a beautiful thing. Just went straight down for you. Your stop would have been right there. Okay? Come on, you little bugger. Just going to put a line here for fun. And it won't stick there. You bastard. Come on, you little bitch. Right there. So that's our stop. Okay? When we got in here, it never came back to our stop up here. And it was divergent because we're drawing it back upward. Yeah, so you would have got short right here. And it went down 54 points, like I said. It gave you 1-to-1, 2-to-1, maybe even 3-to-1, because your stop would have been very minuscule, like 20 points. Okay? So you got 2.5 R on this trade. Then we had another trade. Oh boy, I'm going to start hacking now. My vocal cords are trying to get cleared out. This is another hidden divergence trade, isn't it? Yes, from there. That's going down. There. Right there, actually. Right there. It's divergence. So you would have got short right here. This one's going up. This one's going down. It's hidden divergence, so this one's not going to tell you the direction where it's going. Okay? Only if it was higher highs or double tops, it would tell us. Or if we're at the bottom, lower lows and a double bottom would tell us on the OSMA. But if it's hidden divergence, it will not tell you the direction if you follow what I'm saying here. It's a little confusing, but I finally figured out because there was weeks that went by. You guys, if you're dedicated to watching this channel every day, you saw I was confused. I was going, wait a minute. It's supposed to go down or up. And I was confused. And then I figured out it's the hidden divergence that does not show you the direction that it will likely have the probability to go. Okay? So anyway, here is the hidden divergence again. Right here. Would have got short right there. What time was that? Yeah, that was on the open. So say we got in right here. We waited for the stock market to do its thing, because we all know that when it opens, it could shoot down here and then shoot right back up and then rally up, and you're screwed. You know what I mean? You're screwed. So on this day, if we waited for it to close down here somewhere, which it did, so right on the open of the next candle or a pullback to the 5, you would have got short. So we'll just take it from the open of the candle. So the stop was right here at the swing high, 50 points. And down we go to the bottom of the wick, 88 points. So you would have got points on both hidden divergence setups today. Hooray, hooray. It was good. It was good price action today to trade. It wasn't bad like I was talking yesterday. Maybe they heard me and they're listening. I don't think so. I'm just kidding. Okay. We have a setup right now before our eyes. And it's right here. Double bottom. Once this candle closes, it will be a buy trade if we close up here somewhere. How many minutes are left? Oh, there's 4 more minutes yet. It could go all the way up here by then. Yeah, that's the problem too with trading. You can't get the ideal entry points because the market is always fucking moving, and it'll always move more, always against where you want to get in the trade. Anyway. So that's it for the 3 setups on the NASDAQ today. Let's look at the S&P. What is it doing? I'll show you the setup. Higher high. And right there. And we would have got in. Oh, no, wrong place. On the opening of this candle, your stop, I know, would be really close, like 24 points. And how much did it go down? 85 points. Or no, 8. The stop is 2 points, and it went down 8.5 points. I always get mixed up on that when I ever come to the ES, the 500, the S and the P. Holy Jesus, got a lot of names, huh? And do we have more divergence? We don't have divergence to buy here, but we definitely have divergence to sell. Okay, right from here, right down there. Okay, so we would have got short right in here. This is the S and the P, remember. Okay, sell here, stop at the swing high. That is 5 points, I think. Yeah, that's 5-point stop. We got our 5 points. We got freaking 10 down to here. See, right on the nose, 10 points. 2-to-1 win-loss ratio from there to there. Do we have any, you know, higher close or any of those trades or hookups or, huh? There doesn't seem to be any. Oh no, here's one. Here's one. I found one. Lucky, lucky me. Okay, right here, higher close. Sell it. Down it goes. Oh, those bastards. They're running the alarm tests. One sec. Okay, I'm back. Okay. So we had a nice sell trade there. We had some here too. One here, one here. You know, here's another one here on the way up. Yeah. And look what we've turned into. A mess here now. That's what we've turned into. There's actually divergence here too. Yeah, I got to draw it in. What the hell? Why not, right? From there to there. And from there to there. It all lines up. It's a trade, right? And you would have got in right here. Right on the opening of this candle. The stop would be 7.5 points. Did not go up 7.5 points. It only went up 3 points. So if you would have took it somewhere in there, you would have been golden. If you didn't, you were waiting for your target up here. Well, as soon as they smacked it down here, you would kind of get the sense or the feeling that, hey, this is not working out. So it'd be a losing trade. There's never, never, never all wins like I keep showing you, but every once in a while we have a loser. And they're very rare. They're like 1 or 2 out of 10. And that's it. And even less most of the time when the market's doing what it's, you know, usually normally doing before, you know. Anyway, there's very, very high power control, stressed out people right now. So the market is doing what it's doing. Okay, let's move on. US 30, which is the Dow. I don't know, I guess we could. I got to really, you know, here's a ledge right here, okay? Oh, yeah, and it's still freaking... You bullshitter. There. We'll just leave it like that. What's this here? No, don't want to delete the OSMA. The trend lines. That's what I want to delete. Okay. Right from here, right up into here. Okay, we had a trade on the Dow. And you would have got long right here on the close of this candle. Or if you waited for a pullback, you would have got a better price. But say we got in where my first entry would be. Stop would be at the swing low, 45 points. This is the Dow. How much did we go up? We went up 100. So there's 2-to-1 win-loss ratio right on there. And we also have a lower close, buy it, right on the opening of this big bullish candle here. Lower close, buy it, up, way up it goes. Okay, it's a beautiful thing. All right, that's it for the Dow. Let's look at the pound. Yeah, pound's just stupidness. Well, believe it or not, ladies and gents, there's trades here, but they're in the UK session. It's right here like this. And right there like that. I'll finish them all, don't worry. So low and lower low, okay? It's gonna the line that I'm about to put on the OSMA is gonna point up. Okay? I assure you it's gonna point up. See? Remove this one. Low and lower low, high or low on the OSMA, telling us because it's pointing up, it's going to tell us we're going to buy it and it's going to go up. And that's exactly what it did, ladies and gents. Okay? Right here. Went up 27 pips. It's the pound dollar. Okay. And we had a lower close, buy it, up it goes. And one more right there. Lower close, buy it, and up it goes. We had no, well, here's one. Here's one over here too. Gotta show you that one too. Right? Right there, higher close, sell it. Down it goes a little bit. This is the pound. One more. It's over here. Higher close, sell it. Down it goes. There's more of them too, but hey, that's enough. Hey, that's enough. There's another trade. Low and lower low, which means we're going to have this line pointing up, which means we're going to be a buyer because it's going to go up. It's pointing up on the OSMA because it's going to go up. So, say you got in at the top of this wick and it went up 9 pips and our take profit is 7.5. It's the pound, man. It sucks. Like I told you before, it used to move 400, 500, 600 pips in a few hours for the New York session. Sure as hell doesn't do that now. That's for sure. Maybe they run out of money to trade it. I don't fucking know. But why? Why the drastic change, in range, right? Yeah, it's a crazy thing. Okay, so that's it for the pound. Let's look at the euro. The euro will be worse. Huh, is that a double bottom? Yeah, there's no divergence there because this needs to be less than this valley. There's no divergence. But that doesn't cancel everything out. We do have lower close, right? Oh, look here. I'll show you what this is in a sec. Look what we have. We have a hookup right there. It closed below the 2 moving averages. Then the next one went up. When this one closed up here, you would have bought it right there. Okay, and up it went. 4 pips. Oh, shit. 7 pips. Can I get 10 pips, man? Is 10 pips too much to ask for? Holy shit. Oh, I could never trade the goddamn euro or the pound anymore. It doesn't move, man. It just sucks, man. Anyway, it went up a total of 20 pips. Oh, wow, 20 pips. But you could be a small trader because there's hardly any spread now to trade the euro or the pound. You could be going for 5 pips, 4 pips, 3 pips. There's some traders who go for 2 or 3 pips, and they're trading huge amounts of volume. And that's all they're trading is just little bits like that, Okay, lower close, buy it, up it goes. Here's another hook down right here, but I wouldn't try to trade that after this going all this way. Oh, and what else do we have here? Look what we have here. We have low and lower lows. That means it'll be a higher high on the OSMA, which means, and it's pointing up, which means it will be going up. See, and there it is. Right up it goes. I don't know about you, but I'm still baffled. Every day I draw these on the chart, and I can see them in real time, and if you take the time to do it, so can you. I can't believe I keep seeing them over and over again, and they never come back to the stop. Well, they do, but very, very, Like I would say one time out of 20 or 15, they'll trick you and sell fake you or buy fake you, and it'll come back and hit your stop that you put at either the swing low in a buy trade or the swing high in a sell trade. Okay? So there you have it. This one was good. You would have bought it right there in the opening. See, not even 10 pips. See, 8 pips. But see right here? People who are buying all in here, they put their stop right under here. And what did they do? They came down and they got your stop. Then they took it up. And when they took it up, everything comes in line like the stars and the moon, okay? And you get in your trade and it doesn't come back to your stop that you would place at the swing low right there. Gotta love that, ladies and gentlemen. Gotta get some water. Alrighty then. Let's move on now to the pound yen. Oh yeah. First trade of the day would be right up here. A high and a higher high. So what does that mean? It means that we're going to be going short. Okay? This is pointing down, right? See? Where's our entry point? Right here to sell, right? Yeah, because this is pointing down, the price is going to go down. And that's exactly, ladies and gents, what it did. And not only that, our stop loss would be right here. Not a tick higher, not a tick lower, right at the top of that wick. And it never came back there. So we would have got short. Our stop is always the same amount as our take profit, or take profit too. So it's 19 pips. Did we get 19 pips? Yeah. Right there. Oh, right here. There's 21. There's your 1-to-1 win-loss ratio, ladies and gents. You see here, low and lower low, and then it went up. It went down too far. This is not divergent. There's no divergence to buy right here. Okay? But what I want to show you is, what do we have here? We have a double top. Is it perfect? No, but it's a double top. To me, it's a double top. Okay? And just like that. And we would get short right in here. Went down 19 points, and our stop was 14 pips, pound yen. You would have got your 1-to-1 right here. And you would have got your 1-to-1 right here. Okay? La-di-da. Euro yen? Oh, euro yen looks worse. But we still had that same first trade. That worked out. Okay? Just like that. Pointing down. So what does that mean? It means that we're going to be looking for the price to move down. We're going to get short right here. Our stop is at the top of that swing high, of that wick, and not a tick higher or tick lower, right to the tick, to the top of the wick. And how many points is that? We'll say it's 10. Did we get 10? Yeah, there's 13 right there. Would have got your 1-to-1 on that. Okay, let's look at oil now. What did it crazily do today? Well, she had a nice run up, right? Up to 79 bucks. Yeah, went up $2. It's 212 points. Now, what about up here? High and higher high. Lower high on the OSMA pointing down, which means what are we going to do? What are we going to do? What's the price going to do? Once all the criteria of my setup is met, it's going to go down. It's going to go down. Entry is on the opening of this candle right here. Yes, this pin upside down, pin bar. So if you would have sold right there, the stop is right at the top of that wick, 44 points stop. Now, it would have come down a little bit in your favor, then it would have freaked you out a little bit. I call this the scare stop. How we get the high, the higher high, the retracement, and then the pullback where they make it look like they're taking it up to your stop and they don't, and they scare the living caca out of you, and you jump out of the trade. That's what this is all about. Right fucking here, ladies and gentlemen. You have no idea how many times I see that. Ding, 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 and then ding, down it goes. Okay? If I had a thing on here I could draw, I have one, but I don't know. It doesn't fucking work. I don't know where it comes from. Somewhere in China or some shit. Some cheap shit, some coder that doesn't know how to fucking code it properly. What do they call it? Epic pen. I don't find it to be very epic. Anyway, let's sell it right here. Okay, our stop is 41. Did we get 41 yet? No, not yet. Not yet. We got 35. 36. Only need another 5 points and we got our 1-to-1 risk reward. Okay, let's look at gold now. This is the last instrument of today. Oh, look at gold, eh? Rallied up, yeah, rallied up. First it dropped and then it rallied. And look, no divergence down here. Nothing. Fucking nothing. There's nothing on the 5 minute. Maybe there's something on the 1 minute. Yeah, right here. Low and lower lows. See, right here, it's sticking out at you. You would have bought long, and yeah, it went up here. Went up 37 ticks, and if you would have held on to up there, it's 84. Anyway, it's not divergent friendly most of the time, and that's why, you know how I feel. I do it for Fook. Fook would like to know. Yeah. Anyway, so that's it for today. I did the oil and I did the gold. And that's it. So anyway, ladies and gentlemen, I hope you make some pips today. Be careful. Markets are not normal. They're not normal at all. So, anyway, have a good afternoon. See you tomorrow. Good luck and good trading.